Welcome back. It's time for another episode of Vestact TV. Since it's nearly the end of October, right?
Right.
I thought we better discuss the festive season. So how are you feeling about Christmas, Sasha? Going big on the presents?
No, not really. Not big on Halloween either. Thanksgiving doesn't matter in our environment.
Okay, but seriously, the idea is, what do you think Christmas season sales are going to be like? Retailer, talking locally, South Africa.
Yeah, well, in this space, we like Massmart, simply because they've got a nice spread.
Plus but they had a really bad trading update 2 days ago, right?
Yeah, not very good at all. But I think it's kind of a sign that the SA consumer is still under stress, deleveraging, and the real impact of those 500 basis points not really coming through just as of yet.
Which categories do you think are down? Because general merchandise, the cheap food and stuff is probably okay. What's it, the upper tier stuff and the building stuff that's not doing well?
Yeah, I think the building stuff for the time being is pretty much, I wouldn't say broken, but just, anecdotally, when you go into a builder's warehouse, there's a lot of stuff on sale. There seems to be a lot of stuff that's not moving as quickly as it was in the past. But I think, to step back a couple of levels, we've seen these types of cycles before. You see them come and go. So I'm not quite sure what the answer is, because in terms of the price has moved comfortably off its worst levels.
Price of what?
Of Massmart. Because that's our favorite retailer.
So in line with all the other retailers, it bottomed out in about sort of 2007 when the rates started tightening, the economy was coming a bit down. Since then, it's rallied. In Massmart's case, the all-time high, I think, was 96. Now it's back at about 88, 89, 90.
That's
so
right.
Not a bad performance in recent weeks. Anticipating an uptick and, things coming right. But the operational numbers, not so much. So that's what, probably looking into next year and beyond.
Well, that's what share prices are. They try and predict the future. So I think in the interim, people might be scratching their heads. And we saw a release this morning about credit extension specifically.
Yes,
and those numbers are looking poor.
So national credit extension numbers basically flat. So allowing for inflation in net aggregate, the amount of credit is probably contracting.
Absolutely. And remember, these numbers used to run hot. They used to run northwards of 20, 22, 25%.
Okay, because quite apart from whether people will eat more, baked beans over the festive season, we're interested to know whether the sort of middle classes will commit to further spending. They've obviously been net saving more, paying down debt and so on. So I suppose we should be somewhat optimistic, but these things are very difficult to predict, right?
Absolutely impossible. And normally the price is moving south while the conditions still look good in anticipation of Reserve Bank ratcheting up rates. So equally what we've seen here is the price moving north in anticipation of people having deleveraged, a little bit more money in their pocket, and perhaps, for the time being, it looks a bit ropey, and this might be a worse Christmas than last Christmas.
Okay, but leaving Massmart aside for the minute, we've also got African Bank, which has got the Ellerines thing, so I guess there's furniture sales issues. Any insights there or feeling about that?
Look, there was a report, I think, in yesterday's newspaper or the day before, about Ellerines having done a great job of having consolidated the brands into 4 specific areas where they used to have 13 brands. So I think that's a kind of a separate issue, and I also think they've got a drive to extend more credit to their clientele, to be able to buy more furniture on credit. So
more credit sales as opposed to cash sales.
Correct.
But we're going to get some results there. African Bank's September year end, so we should see a trading update, I think, in the next couple of days. And then just one final question. I mean, globally, what about Richemont? Obviously, in the consumer goods is really not all of their customers are Christians, obviously, but what do global year-end sales look like for Richemont? What do you think?
Look, I think better than anticipated. Towards the beginning of this year, people were expecting the entire global luxury goods market to fall plus 20%. Now I think people have kind of thought a little bit longer, harder. There are areas in the world, say specifically Asia, which is growing tremendously. And I saw a report this morning that again reminded us of where we are in the cycle. It was a car dealer, was the Volvo guy, and they're talking about Geely, etc. Now I know it's a little bit off the topic, but he suspects in 5 years' time that global car sales are going to look a third North America, a third Europe, and then a third Asia. So there's this big growing demand from a much vaunted middle class that's starting to emerge in places like Asia, where Richemont is a little bit stronger than some of their competitors. So that's a reason why we like the stock. Less focus on developed world, more focus on developing world. So you should see sales in that region strong and continue to grow strongly. And then I anticipate in the developed world you'll start to see a pickup in the first half of next year. So perhaps a bit of a ropey Christmas year for everyone globally, but in anticipation of a big pickup towards the beginning of next year.
Okay, but that does appear to have been priced into the stocks, because we've seen all of these retail-oriented stocks pick up quite nicely, because obviously investors are believing that the future year sales are not going to be too bad. Okay, well, we're going to have to wait and see how it goes, but I guess the takeaway is that stocks are priced not only for this year's immediate sales, but in fact on what shareholders anticipate they can earn on all of the Christmases to come, so to speak.
Dead right.
Okay, that's it. Thanks, guys, and we'll be back soon with another episode. We just got to think of a new topic. Bye.